Is the dump over for Bitcoin? Have we made the low, and can we potentially continue all the way to the upside to go and claim the all-time high and perhaps go to higher levels? Today, we'll analyze the price of Bitcoin, discuss the high probability scenarios, whether we're going up or whether there's still part of a correction here to the downside where we could still fall a little bit lower before we see momentum back to the upside. Remember, recently I started testing out a new exchange, and it's down in the description of this video, the second link where you get that $380 sign-up bonus, no KYC year on weeks. Also, the reason I started testing out this exchange because we all love Mexi with the lowest fees currently still in the market, and Weeks is that competing exchange which doesn't have as low fees as Mexi but still one of the lowest in the market. We also have a dedicated Discord channel where you can go and post anything about the Weeks exchange, but so far I'm really enjoying trading here on the Weeks exchange. Also, we've got Bluffin, no KYC, Bybit, and Mexi, where unfortunately if you do want a no KYC option, they do require verification. Let's go and analyze the price of Bitcoin. Looking at Bitcoin here on the 1 hour time frame, and I just look at this impulsive structure here to the upside. It does really look like a three-wave structure, and now we have a three-wave corrective structure here to the downside as well. And I know some people are speculating that we're still going to make another high and then perhaps have a deeper correction, which is definitely on the cards, okay? So for that scenario to play out, this is why I took a fib from this low to this high, speculating that, well, what if this is a 1, 2, 3, okay, this was the end of 3, which did tap the 1.618 extension, which is a common third wave target, and this is a fourth wave corrective structure, and it does look at the moment like a beautiful three-wave corrective structure in a WXY ABC, okay, which did tap the 1-to-1 extension over here and did not invalidate the fourth wave just as yet, because if this is a 1, 2, 3, and this is a three-wave structure which is now correcting this impulse here to the upside, what you want to see is a three-wave corrective structure, and now the impulses needs to continue to the upside to come and claim this high once again at $69,570. If there is still the potential, okay, to go and create a 1, 2, 3, 4, 5 year to the upside, what I find a little bit concerning over here is when I take the time-based fib, and I did speak about the time-based fib quite extensively yesterday during my live stream, so go and check it out if you haven't seen how I actually use the time-based fib to go and calculate proper corrections to the downside. So for the fifth wave to have a chance here to the upside, to go and claim this high over here at $69,500, what you would like to see is this impulse over here had a correction. For this impulse, this corrective structure now needs to be finished to go and complete the fifth wave here to the upside. What I do find a little bit concerning, when I take a time-based fib from this pivot and I measure the impulse to this top to see how long the corrective structure has taken, you can see that this low was made before the minimum target of the 0.382, where you have an impulse and a corrective structure to the downside. So it's not an invalidation. It is just a bit concerning that the low was made before the 0.382, which is usually considered a minimum target. So there's still the potential for this correction to still continue to the downside, okay, to at least complete after the 0.618 and preferably at the 1-to-1 extension, which is round about the 28th of October. But now, if we had to entertain the scenario and say, okay, well, potentially there's still the chance for the fifth wave here to the upside. We have not tapped the 0.618, which is usually an invalidation for a fourth wave. Okay, if you're expecting that 1, 2, 3, 4, 5, the 0.618 was the invalidation. We did find support by the 50%, which is usually the maximum target for a fourth wave to the downside. Yes, the correction did end from a timing perspective before the 0.382. But if I had to say, well, I'm giving the scenario the benefit of the doubt, okay, I can go and take a fib extension and go and calculate where potentially the fifth wave can end. So if this scenario had to play out where we start building impulses back to the upside to come and claim the high, you can go and take a trend-based fib. You take it from the low of this impulse to the high, to the low that we've just formed, and usually, okay, here by the 0.618 at $71,841 is a target for the fifth wave here to the upside. What I also find interesting about this target over here is when I go and switch on my weekly levels just a little bit slightly below, okay, we have a weekly naked point of control, which could definitely offer massive resistance to the upside. And you can see how this weekly point of control has offered support, right? We broke down, we retested it as resistance, and now we have claimed it. So you can see how powerful these levels are. So I wouldn't be surprised if we are forming an impulsive structure here to the upside and perhaps reject here by the 0.618 at $71,000, and you leave that wick behind, and the body, the high time frame body candle closes below the weekly point of control at $71,000. This will then mean that this 5-wave impulsive structure to the upside is completed, where we can then see a much deeper 3-wave structure to the downside, even going down as low as $62,000. So these are just one of the scenarios that I'm currently watching, speculating, okay, that we could potentially still come and claim the highs over here, where we have a 1, 2, 3, 4, 5. The other scenario that we still have to keep in mind is that this also looks like a 3-wave structure here to the upside, where the C wave could be in an A, B, C, done. And all of the price action that is happening in this zone is still a correction to the downside. And in this scenario, if I just take the fibs here out the way just to clean it up a little bit, if this is the high for now, where this was basically an A, B, C, this was the end, and this is still part of the corrective structure. What you can then expect is perhaps this is a 3-wave corrective structure to the downside. It's creating another 3-wave corrective structure to the upside, with then another larger 3-wave corrective structure to the downside, which is basically a W, X, Y to the downside, where we could still come and tap the $62,000 area, which is a high confluence bouncing area, without claiming the high, which is basically also referred to as an A, B, C, or a W, X, Y, grabbing all this liquidity here at $68,000, okay, still creating a lower high. Okay, you want to create a lower high for continuation here to the downside. Also, when I look at the liquidity heat map over here, you can see that round about that $68,000 zone, okay, if price finds the strength here to move to the upside, you can see inside the $68,000 zone, okay, is where that massive liquidity pool lies. And usually when you grab a massive amount of liquidity, price usually gets a reaction. So I wouldn't be surprised if this is all still part of a larger corrective structure, which is not going to come and claim the high, where you basically have an ABC, okay, another ABC, and another 3-wave structure to the downside, where you grab the liquidity and the correction still continues to the downside in a WXY corrective structure, coming to claim the $62,000 area. And like I've mentioned, at the moment, this scenario does carry slightly higher probabilities because of where this low ended, specifically from a timing perspective. Now, from a simplicity perspective, because I know that Elliott wave theory can be very daunting and confusing. From a simplicity perspective, we have to acknowledge that we have broken trend. Okay, so when I switch on my today analysis, you can see that we have successfully broken out from the trend over here. And the trading setup will look more or less like this, where you play the breakout, you target the highs, you have your stop here below the lows. The risk to reward is not really attractive because it's less than a 2-to-1 risk to reward. If we do go to that $71,000 area that I've highlighted, where there's also that weekly point of control, you can see then it makes the trade perhaps worth it here to the upside. From a simplicity perspective, we have broken trend. Okay, what I like to do is I like to take a fib from the high to the low, and I start paying myself as a trader by the 618, which does have, you can see the beautiful confluence here. We have the resistance zone where we struggle to break through here with the 0.618. A little bit further up, we also have the 0.786. And if this is an A, B, C here to the downside, the B waves also really love the 0.88 at $69,000. So from a bearish perspective, what you would like to see is perhaps a rejection in this zone, okay, where it looks bullish here at the moment. Price moves up, and this is why you need to pay yourself as a trader. There's definitely the possibility to shoot up from here, and that's where you could potentially leave some of the position open for higher levels, but there's also that probability that you're going to reject in this zone, form a lower high, and continue the momentum here to the downside in a larger 3-wave structure to roundabout. You can see here the point of control of March, a weekly level. There's also a daily level over there. There's a 0.618 Fibonacci retracement level over there. So quite a high confluence zone here at $62,500, give or take. For more detailed technical analysis, down in the description, come and join our Legends trading community, where we dive into a lot more detail and look at those daily trading setups. Thanks for watching. Remember to hit the like downstairs, and until the next one, cheers for now.